Okay, good morning. Welcome to London session. I hope you're doing well. Right, let's go over here. And as usual, I'm gonna start with the dollar index. So dollar index is still bullish. I think Wednesday we did mention that we'll be heading for 109. 109 was here, right there, and we did get that yesterday. So I'm kind of looking for a continuation to 109.77. We probably could get to 109.80. So 109.80 will be the next upside objective for the dollar index, and that'll be bearish for the euro. I think euro should also continue lower. The next draw will be 99. Okay, so 0.99 is the next draw on liquidity for euro. So you're gonna stick with the bearishness until you're proven wrong. Okay, stick with the bearishness until you're proven wrong. If you try to go against this trend, you will get yourself hurt. So try your best to stick with the trend until it proves otherwise. Okay, so next draw will be the 99 full figure, because we've gone past 1 and we've gone past parity. So look for 99 as the next draw on liquidity. British pound, the next draw is 1.5. let's say 1.7 for now. Okay, 1.7 is the next draw on liquidity. There is an imbalance on the H4 down in here. That's where I think price might go, but for the meantime, in between that, you have 1.7. So we're looking for 1.7 or 1.17. There we go. Right, so that's the next downside objective. Yesterday managed to close bearish below Wednesday's low, so that to me is a sign of a continuation. I like that. So today there's a likelihood of if we don't go down today, then that will be Monday, but I'll look for continuation today, and then if Monday continues, that's fine. What you want to pay attention to is the Asian high, which is this high here, right? I think it might go and run the Asian high before resuming lower. So be aware that price can go above the Asian high before going lower. So don't sell it yet. Also, you can use this range high to this range low and actually look for at least 50%, right? So 50% will be somewhere in here, which is above the Asian high. I don't recommend selling where we are, because we are below this low and that low, right? And it's come back inside a range. So just patiently wait for some kind of manipulation for the day, and then you can look for continuation to the downside. New Zealand, same thing. I'm looking for, let's go to the daily time frame. This one is a bit tricky because we have the Aussie New Zealand dropping. I think I actually have a trade on that. Aussie New Zealand is dropping. I have a trade on that. So New Zealand is gonna be kind of sideways, but if it resumes going lower, we are looking for 6044. Okay, so 6044 is the next downside objective. On the H4, you can see we are stuck in a consolidation. Yesterday was a nice day. Actually got some nice sells on this one here, right in here during the London lunchtime. We broke down and then pulled back into that area, and I saw short to target that, and that was it. So next draw 60445. I will look for some form of a breaker to sell short. I will not sell where it is now. Okay, so you can look for, I think, a swing high on the H4. Okay, like that. Okay, so if this candle closes, that will be a lower time frame breaker, run, and then break. Okay, so we need to close below that candle, and that will give you basically a breaker and a swing high. So you can use that as a confirmation to to sell short. Yes, the sell is not on the indicator, right? I don't solely use the indicator. Okay, it wasn't called on the indicator. I took the sell based on my understanding in price. Yeah, I took the sell based on my understanding in price. It's nothing to do with the indicator. Okay, so you're not gonna get that. Yeah, I have the indicator, but you can see my my level of understanding in price goes beyond the indicator. So just look at it. Breaker, it's a breaker here. Price is gonna struggle to go higher, right? Price is gonna struggle to go higher, so it's gonna drop again. We have this as the breaking market structure. Okay, so I would like to see that left open, and then we hit time of the day, right? What time is it? 7. That's all I did. Okay, that's all I did. It was 7 o'clock, and then I saw short based on the fact that we broke down. We're struggling to go above this, right? 1, 2, rejection, 3, and then it's 7 o'clock. So I decided to sell short, leave my stop loss above this high. I actually gave myself 25 pips away, and I think I've shared this. So in the boot camp, right, in the boot camp, that's exactly what I taught you guys. Okay, 7 in the morning or 7:30, then you just take the trade, give yourself a couple of pips away if you believe that the market should be going down or should be going up. So I gave myself 25 pips stop, and then I think it's actually on here. There you go. Right, and my stop is there. So that's the 25 pip stop loss. Okay, so it's nothing to do with the indicator. It's got to do with my understanding in price and time of the day, which is why I wrote today's title, time and price, right? That's time and price idea that I used in there. Okay, back to this, right? So we are currently seeing some sort of a breaking structure. Now we have to wait till the 4-hour candle close, and then I will look for the sell. So on the 30 minutes chart, I'll wait for that 4-hour candle to close, and yeah, I'll look for a rejection, and I'll trade it back into this imbalance down here, somewhere in here. For today, I'll trade it to somewhere in here as partial, and then I'll let the rest go and see if we can get to 60445. That's also depending if dollar is also gonna go all the way up to the 109 level. All right, I think we can, because it's bullish. We formed a swing low on the daily time frame, so I'll expect another expansion to the upside. All right, so that's that. Aussie, this I think should also smash down today again. So same criteria, wait for this candle to close. That would be a run above this high here, right, and run above that, and then a breakdown. So on the lower time frame, that will give you, I think it's already on its way. It's a market maker sell. Yeah, it's already on its way. And I think there was a trade idea on this at 4. What time was it? Because I saw that there was a sell idea at 6. So at 6 right here, there was a sell idea, right? So maybe that is the one that you might have caught, right? And if you caught that, then you should be in some profit. And this time he actually pulled back like you wanted yesterday. Okay, so I'm looking for this gap, and then ultimately a run below nice lows over there. Okay, I'm expecting them to go down again. This time I want to see aggressive run, because yesterday it went down and then quickly rejected. So I want to see them aggressively run down. In terms of targeting, let's see if they've closed in this. Okay, that's exactly where they went. That's what caused that price action. So yeah, there's nothing in here. Down there is the next gap. Maybe the H4 might have something within those. Let's see this one for now. Okay, we have also hit that, so that means we will potentially close that one in. So I'll look for 6674 as the next downside objective. Okay, so 6674 as the next downside objective. Dollar CAD yesterday was amazing. It was crazy. I didn't catch none of that, but that was a pretty decent move. And I think it went up almost 2% for the day. It's overextended, so what's happening now, it's actually normal. When we have big range, it tends to consolidate after, like big range and then it consolidates. So big range and then it consolidates. I wouldn't want to trade it today. Yeah, it's gonna do that because now the way it went up, most people would have missed out, and anyone that is still holding shorts, because there are people like that, I've been there before, they will not be allowed to get out. So it's just gonna keep going sideways to mess up your their psychology, not you, but it's gonna mess up their psychology. So it's not gonna go down or it's not gonna go up, because if it goes up, then they're gonna feel the pain and then close it, and if it comes down, they're gonna feel the joy and expect price to come back, and they either close at they will close their trade at break even, or maybe it might go down, right? So if they keep it in a sideways market, then your psychology will be messed up, and then at some point you're gonna give up, and it's either it's gonna give you more pain, or you're gonna close it and then it comes back down. Yeah, the hokey pokey. So there you go. Yesterday I was looking at this pair, and I think that was the pair that I should have this was the pair that I should have actually looked at, because it did give me an indication that today it might retrace. Why? Because we were trading inside a OTE, right? We were trading inside OTE, so I was anticipating some form of this kind of price action, right? So I think I should have looked at it when I woke up in the morning. I would have caught that sell there, right? I could have caught that sell, but it's too late, so I'm gonna leave that alone. Let's go to Euro Pound. Euro Pound this morning. So yesterday afternoon, right, I was looking at price action on the 4-hour. This candle, at some point it was down here, so I was looking at this order block and the fact that we are coming down to break and close below this, and then anticipate a continuation to the downside. Only for my surprise, it quickly rejected, came back up again, and then closed bullish. So it kind of changed what I was expecting going forward. On the daily time frame, it almost formed a swing low, which is what I was waiting for the close of the day, before I make up my mind what to do with it. Now looking at it right now, it's more sideways than trying to retrace, because it couldn't close above this down candle, neither that one. So it feels to me that it's just consolidating, plus we are trading inside this big imbalance, right? Now for price to go higher, we need to close this one in before it actually decides to go higher. So I'm still bearish, looking for price to come back to this low. Okay, but today being Friday, they might take it to the mean threshold. They might take it maybe above that and then drop it down again. So this is my drawn liquidity, and inside here is where I'm expecting price to move away from to come down there. So I'm waiting for price action to give me reasons to go short. I actually went short in here and I got clapped in here, right? I was expecting it to continue going down and it came right back up again. So I got clapped on that one. So I'm waiting for another opportunity to sell to continue going down. All right. Now, like I said, it can go up to that level, and that's fine. As a matter of fact, let me see. They have closed that one in, so just the mean threshold of that daily imbalance can cause price to come back down again. And I think with this one, for those of you that uses the indicator, right? And when I say those of you, you know yourself, the Enigma indicator. It did call a trade. It did call a trade on that one on the 1 hour time frame, I think. Yeah, there you go. It did call a trade yesterday, and if you want, you can take it because it's still there, right? But make sure that you're not exceeding this target, because I don't think it's gonna go all the way up there. Plus it's just consolidating, right? So we are not trending for price to rally, but because it's giving that trade idea, right? You can see retracement to the entry, so you can take it up to the mean threshold and that's it. If you don't want to, because we are bearish, you can just leave it alone. Now there has been improvement on this, which is the trend. Based on the trend, I think the trend has changed on the system. Okay, based on the system, the trend has changed. That's why it's giving you the buy, because if it had the trend still being bearish, it wouldn't have given you the buy. Okay, but I do my analysis before I actually stick it on, so just so you know, right? That's why I can be ahead and get a trade before it actually gives a trade, right? So looking at this, it can go up here and then go down. Whichever way doesn't bother me because I'm not in it. Okay. Gold did finally get to that 127 level that I mentioned. First of all, it went for that low, which is what we were looking for, and then the 127 projection of that range. It hit that level to the pip, right? It hit that level to the pip yesterday and then rejected. Okay, but I'm still bearish. I'm looking for that as a draw on liquidity. So gold downwards we go. Okay, so next downside objective is the 1676.00. That's the draw. All right, entry wise, I think once this candle closes, similar to all the other ones that I pointed earlier, that H4, once it closes, then I'll look for some potential entry. If it doesn't, maybe New York session, looking here, we did have a run above the high, breakdown. It's a breaker, it's a huge one with that gap, small one in here. I'll attempt to sell once this candle closes, and then if it stops me out, then I'll look for another one in here, and then if that stops me out, then that's it. So 2 strikes and then that's it. So waiting for this to close, my stop will be above this high, and then I'll look for that movement down here. If it stops me out, I'll wait for price to come in here, and then I'll look for another sell my stop will be above that high, because I don't believe it should go beyond the gap, right? So my stop will be there, and again I'll still target that level. Oil, we did get the quarterly low to be taken. That's what we were looking for. So now I'm on the sidelines. I'm waiting for what they're going to do with that. Right now it looks that, low, high, low, break, fair value gap. It looks like it might trade back here and then make a run for these highs, and then maybe that high. Okay, so watch this. 93.50. Watch 93.50 and then see maybe New York session. I don't know, maybe this London session might drop in there and then go up, but look at it during the New York session and then maybe get a Friday trade. ICT calls it TGI Friday trade, where he looks for price to retrace after the week has completed. So we formed the low of the week on Thursday, and then it's gonna retrace. So what that is the open, manipulation, expansion. So this low has been formed here, and then that candle close. So wherever it's gonna close, that's what this trade can do. If it hits this and then goes up here, this will be your open, small manipulation, and then down, and then wherever it's gonna close, that'll be your power of 3. Okay, so that can give you potential buy. All right, Bitcoin, I've got a buy on that today, this morning. I don't know whether they let me see if it did give a trade on that. No, it didn't. What time frame am I on? No, it hasn't given a trade yet, but I bought it. I bought it based on this OTE, this low to that high, pull back inside this, break, pull back, and then right here, right, I bought this candle right there, right, and then boom, within an hour, price shot up. I'm targeting OTE relative to the down movement that happened. So this high to this low. Right, I'm targeting 70.5 right here. And we do have a high over there. That's what I'm targeting. Okay. So that's why I bought Bitcoin. Plus it was trading at 50%. Oops. It was trading at 50% at the time that I sat in front of the screen. That's where price was trading at. So I bought it. Alright. And time of the day. And if you look at the daily, what is the daily doing? And this will be a lesson for Leo, right? Even if you're bearish, okay, price can change its mind. Regardless of what you think is going to happen, price can change its mind. You have to be flexible. Okay, I'll go on to the pound yen later, but for now, use this one as an example. Price can change its mind, and when it does, you need to change your mind. You can't just have a fixed idea and then you just stuck to that idea without thinking otherwise, because that's what causes we call it brain freeze, because you are expecting something to happen and it doesn't happen, you kind of freeze. Okay, so you need to be able to have a flexible approach, so that when the market changes dynamics, you can also change. I've been at that position before, where I marry a bias, and then that bias just, it changes and I'm still stuck with that bias, right? It's a very toxic way of thinking, and it didn't help me. And it took some time to change, but overall, I had to change because my account was reflecting it, and it usually happens when I do my analysis over the weekend, and I have a bias, and I come into the week and I trade that bias, and then the bias changes, then I'm kind of confused, and sometimes I don't want to accept it, and it does reflect, or it did reflect in my it reflected in my account. Therefore, there needed to be a change, but that change took a while, because the way the brain works is that it needs to suffer pain before it can change completely. So it took me time to change it. So even if I'm expecting, like here, I'm expecting price to go for this equal low, right? If price is there, we open, we drop in, okay, price is gonna go and take out that low, and then complete rejects. The only thing is, you need to accept the loss, and sometimes accepting the loss can be a little bit challenging. The only way you will not accept the loss is if, one, you don't know what you're doing, and then two, you over leverage. Because one, if you have either or, right, happening, then it's gonna be very hard to accept that you're wrong. So if I'm expecting price to go here and it doesn't, and it rejects, I have to accept the loss, okay? Or you have to accept the loss, and then see what price is trying to do, and then, because price is trying to communicate to you, right? So if it's communicating that it's going up, why don't you buy it? Which is what happened with yesterday, right? I gave the pound yen as the draw downside, as the draw liquidity, but by Wednesday, price didn't want to go down there. So Thursday was a very good day to be a buyer, and maybe today as well. So that's what this is. So I'm expecting them to move a little bit higher, right? Same thing was on Ethereum, but I decided to go with Bitcoin because Ethereum was the move on Ethereum was too aggressive, even though this one was aggressive, but not as aggressive as Ethereum. So I think this one has a bit of a room to go. Okay. Um, 16k soon. Bitcoin from 65. My TP1. And now 16k. Yes, I'm not saying it's gonna go up, right? I'm just looking for that. Now we don't know, okay? We don't know. It's currently trading at a decent price level, that I'm not gonna lie. So that is why it's kind of stuck. Right, I use swing projections on the high time frame, and you can see we did hit the 127 precisely, okay, and then just rejected. So because of that, for now, this being a higher time frame, if it was a lower time frame, that's completely different, but on a higher time frame like this, I do respect the fib levels. So it might give a short-term bounce, okay, maybe it might trade back to this old low, okay, but then it will continue going down because the market is bearish. All right, I'm not saying it's not gonna go down, and I'm not saying it's gonna go to the moon. All I'm saying is we've hit a level, it can retrace. How far? I'll play the market structure that it gives me. So far on the daily time frame, it's consolidating. So I'll buy if it gives the opportunity, and then I'll sell if it gives the opportunity. Okay. What I want to see for a proper continuation is something like this. And then I'll be interested in continue going lower. But as it is now, this is accumulation pattern, right? It's not trending, it's accumulating or sideways. Okay, so that is that for Bitcoin and Ethereum. This looks like a perfect buy. Hang on, someone sent me a question, let me read it. This looks like a perfect buy and sell model on Atom on 15 minutes. Oh yes, right. That I'm trying to figure out where I could have got an entry, because I've been tracking and looking for OT, but it never came there. It never came. Was there another entry technique I could have used? Maybe you can cover it. Oh, okay. Give me 1 second, guys. Do I use standard deviations? It depends on what you mean by standard deviation. Is it for the Asian range, or the flout, or the central bank dealers range? Is that what you're talking about, or just standard deviation as a concept? For flout and dealers range, because I could never understand it. Me neither. I don't use it. I'll be honest, I don't use it. I've never used flout. I've never used I'll talk about something like that in a second. All right, give me 1 second. Let me look at this bad boy for one of my VIP members. Okay, so the question was, he was looking to buy because now it's appearing to him. It's appearing to him that this was a market maker buy model, but he's now seeing it, right? He's now seeing it that it was a buy model. So how would he have got an entry? So I'm gonna answer that here. So first of all, we had, or if you remember, I talked about this area as a potential OTE, right? And then when price got here, I said watch this gap, and if we go through this, because I've backtested this before, we run this low, and then price went up, but price never got back in that area. So that was the first time. So there's a possibility that it's going to move away from here, but if you got in early, take partial, once it comes back to entry, and then leave it. Once it breaks market structure, then you can add it on. Now, when it comes to the market maker buy and sell model, right, your ability to spot it early, it's going to be crucial, because if you are able to spot it early, then what it's going to translate is you can identify the areas of you can identify the areas of distribution over here, right? So in that drawing that ICT has shared online, right, you see something like this, right? So the area of distribution is here, and this is the area of distribution. So if you can spot the pattern early, then you don't need OTE. Okay, you can look at those areas and then anticipate trade idea forming at that area. So here, right, in here, you can buy as soon as price gives you either an order block, if it gives you a gap, use that area as where price a trade might form, and then up here, okay, up there, a trade might form. So the way I use it, or the way I yeah, let me put it that way, the way I use it is I look for price to first of all trade above it. Okay, it has to trade above it. Once it trades above it, then in that area I want to see something like this. So I want to see something like this. That we have a down candle and then price trades above it after we've gone above this level. Okay, so after we've gone above that level right there, then I'm interested in buying, because to me that it's like this is like a mitigation block to me, right? So if we break above it, then that can be an area of buying. Okay, and the same thing in here, that can be, once we go above it, that can be an area of buying. So your ability to spot it early is going to be crucial, so that when price is actually giving you a trade idea in here, you will be able to see it. But it comes with a lot of practice. Okay, it comes with a lot of practice. I think I showed you the trade that I took using this pair here. That was the day it went crazy up. Let me see if I can remember that. Yeah, in here. Okay, so I spotted this, and then it popped, right? So I did not get an entry in here. This is where I got my entry here. So on the lower time frame, I'm gonna go, and you see it was on the 5 minutes chart. Yep, in here. I don't know if I took it on, let me see if I took it over here, because I take trades everywhere when I'm practicing. No, it's not on this. I think I took it on the MT4, but I took the trade I think somewhere in here. It was during the New York session, right? Because that's where we were trading. First of all, we've come above that first area, okay, this area. So I know that and again, it's going to be depending on your experience. I know that once we've gone past this, then in here it's gonna do the same thing. It's gonna accumulate, right? And I'm targeting this high. All right, so I think it was a down candle. Let me see, what date was it? On the 4th of July. 4th of July. 4th. Okay. I want to see exactly where I got in, so you can understand that sometimes OTEs are not going to be given if this pattern is there. Storm, 4th of July to 5th of July. Okay, I've seen it. It was this candle because it went above that high. So we had this low, this high, that low, that high, and then we formed this low and we traded above it. So right here, that down candle, that's where I got in, and then it just went up. Okay, so let's go back to the high time frame. First of all, you have to be able to spot this, that this is a buy model, right? So back to Atom, you have to be able to spot it somewhere in here. Remember what I was saying earlier, you're not going to see the consolidation, right? Even myself, till now, I don't see it, but I see right after this candle pops. Okay, once this candle pushes away, I look to the left and I know, okay, because sometimes you'll be stuck in the lower on the higher time frame like this, and you will not be able to see it. Okay, so you might not see this as a consolidation on the time frame that you are on, right? So it's going to require to obviously change sometimes time frames. That's why you have the benefit of using this, right? So if you use something like this, then it will be easier to spot if there is a formation somewhere, right? So this being the H4, this being the weekly, this being the daily, right? And this being the 1 hour, and you just keep changing time frame, lower time frame over here. So it'll be easier to spot it, right? And then once you spot it, then you can look for the areas of accumulation and distribution. So right in here, that's where you're supposed to be seeing it over time. This is where you're supposed to be seeing it. So once you see it that way, then you can look for your buy in here, because apart from that, we don't have anything on that side. So if you miss a buy in here, you're not gonna get a buy again. Okay, you're not gonna get a buy again. So until maybe, right? And maybe that's what you're asking. This area on the, let's go to the H4. This can also be, right, an area of distribution, and it might attack this high. I'm not saying it's going to, but it might attack this high. So if that's the case, then this area can be an area of what? Distribution. Therefore they can accumulate over here. So if you're looking at that from that point of view, then yes, there can be a trade idea here. The only problem to that is that if you miss an entry here, right, and this is a buy model to go and complete here, I am not looking to buy here because that's OTE. Okay, that's OTE. I'm not going to buy there. Okay, but you can, if you have experience and sorry guys, my dad keep texting me. Right, so I'm not going to be looking for a buy here because right there it can just reject and come back down again. But based on experience, or based on your experience, right, this can be an area that you can buy. Why? Because you have seen it over and over again that this low to that high back to this low is what? Optimal trade entry. So there's a high probability it's gonna go and attack this high. That's going to be your experience. Okay, so based on that, then you can buy here. Okay, you're not going to buy there because it's an area of distribution, therefore you're gonna buy here and take it out. No, it's gonna be based on your experience. So that will be entirely up to you if you want to buy there to go and attack that. And if you're buying, you know, your stop loss should be below these lows here because it doesn't need to come down there. If it's actually accumulating, it doesn't need to come down there, right? Especially once they've gone above this high, right? It doesn't need to come there, so it should just expand and go and take out that high. And looking at how Bitcoin and Ethereum is playing, it can do that. I'm not gonna give you assurance that it's going to do it so that you go and bet your money on. I'm just telling you that looking at what Bitcoin is doing right now, right, it has the potential to go up there because they are pushing up on those two cryptos, especially on Bitcoin. Right, so if that's the case, then this can go higher. Okay, that's my long way of telling you yes. But you get the point. Okay. Okay, I think I've got 3 minutes, so I'm just gonna spill out the bean. So would you be looking for a market structure break? No, you don't look for market structure break. All you're looking for is I showed you. You're looking for a down candle to be traded above. I mean, you're looking for an order block in here. So whatever you feel an order block is, I'm not gonna show you what an order block is. You should know. Okay, so if you think this is an order block, right, this down candle here is another block, right, buy that. But what I'm saying is your stop loss should be below that low because this is an accumulation. So if you leave your stop loss anywhere in here, they can still come back in. Right, they can still come back in here, they can still drop and then go back up again because it's an area of accumulation. Just think about it as prices going sideways, right? So you don't want to be leaving your stop loss anywhere in there. Okay, so you don't look for OTEs, you look for an order block to buy, and you can break it down in a way that can also help you. Say, as it's accumulating in here, Price is fractal, right? So this is a low, that's a high. As a market structure break, that's OTE. That can also be used. This is a low, that is a high. That's a market structure break, that's OTE. That can also be used. Right, this is a low, that's a high. Price makes a new high, so it can come back here, and that's another block that can also be used. So it depends on how you want to dissect that area to get an entry. All right. Okay. Let's move on. Something that I wanted to show you, why I put the title time and price for today. It's something that I was looking yesterday, and I decided to share it. I did share it with my private group yesterday. It's not something that someone taught to me. I've heard the phrase time and price, but yesterday it actually became it's like something hit me, and I realized, okay, shit, sorry for my language, that's what potentially time and price means. So I was looking at what pair was it? What pair was I looking at? That was just yesterday. Aussie. I think it was Aussie. Yeah, I was looking at Aussie on a 15 minutes time frame, right? And let me move all this drawing. It's 10 o'clock. Let me go and check the H4 time frame. Yeah, that didn't close. Okay, that didn't close. Yeah, I did that. This one looked like it did close. I have to zoom in to see whether it did close or not. Yeah, it did. So check the 1 hour time frame. Check if that's not 1 hour, 15 minutes. I'm just mapping out potential New York session scenario. Okay, I like that one, and then that high. I'll see how price is gonna behave at these two price points. Preferably, I want them to run stops and then go down, but they can just come here and then drop. Okay, so yesterday I was looking at price, and I'm gonna end with this because I need to go and pick up my dad right here. Now, this indicator, right, if you can get it, right, it's the institutional pricing points, or full figure and mid figure. Okay, so the 00 and the 50 levels. Yesterday I was staring at the screen and then it hit me. This is the price aspect that ICT talk, in my opinion, okay, in my opinion, this is the price aspect that ICT talks about when it says time and price. Okay, because the way we look at price might be, okay, we have a run above this high and then price breaks down, therefore we have a breaker, right? The breaker is the price, but that's too is too vague, right? When I say too vague, it's because it can be that price, it can be that price, it can be that price. Which price? Okay, but this is very specific. Okay, it's very specific. It's that price there. Okay, it's not that one, it's not that one, it's not that one, it's that. Okay, so when there is a narrative that fits around a particular price and time meets that price, then something happens. So this is a price and then it meets with time. So right here was one right here was exactly 1 p.m. New York session, right? So it hits it and then boom, quick rejection. Okay, so what was there? Well, there was a gap, there was an auto block, but there was price 68000, and then price just dropped down. Okay, same thing here. Let's go and look at that. There was a gap in here, but ignore the gap and look at the price, 6800. What time of the day? 1. And then look at the reaction off from that. Boom. Okay, if you go through if you get the indicator, just go and study it and apply time to the pricing point, one right here. So that's going to be London 700 gap, but ignore the gap and look at the price, and then boom, London close, time, price, and then boom. Okay, so I'm just gonna leave you with that. I ain't gonna say much more. I don't know more about it. If I did, I would actually help you, but I don't. I only saw it yesterday when I was looking at this pair, because I took a sell right here. I took a sell right here on a 15-minute chart, right here, right there. I took a sell, the 67500, and it wasn't the right time, but when I took the trade, and this is how the screen was, now the reason why I took the trade was because price took out this high and then broke down, so I was using that as a breaker with the gap. Okay, I was using this high being run, London, breakdown, breaker, right? So that was what I was doing. But then I have this indicator, I put it on to check stuff, and when I did put it on, and I was like, wow, okay, let's go back and check, and then it hit me. Wow, okay, no problem. Then I started going through, and then I went through a bunch of other pairs, and then it was like, okay, now when time meets price and something over here, right, it's gonna be like crazy. So right now I did highlight that gap, right? I did highlight that gap. So if price gets here, it hangs around, and then New York session, we are still here. What do you think might happen? That's time meeting with price, and then we might get some kind of a rejection. Okay, so that's all I'm gonna share with you guys for today. I appreciate you guys watching. I will see you on Monday, same time. I'm sorry, Monday, my bad. I'll see you next week, Wednesday, because Monday I will not be doing sessions. I want to take Mondays off. So I'll touch base with you on Tuesday, Wednesday, and Friday. And if I do see anything that catches my attention, I will post it in the I will let you guys know in the Telegram channel. Okay, so enjoy the rest of your day. I will make sure that you guys are good till September, and then from September we will see what will happen. Okay, so have a nice day and take care.